This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending July 2nd, 2022. Our question this week is, what is a bear market trap? The answer will be provided later in the video. This week, the market ended lower. The Dow Jones Industrial Average increased 1.05% on Friday, but was down minus 1.28% for the week. The S&P 500 increased 1.06% on Friday, but was down minus 2.21% for the week. The Nasdaq increased 0.9% on Friday, but was down minus 4.13% for the week. Looking at the week, we can see that there were 11 down finishes versus 4 up finishes for the major indexes. On Monday, Tuesday, and Thursday, all the major indexes finished down. On Wednesday, the Dow Jones Industrial Average finished up, while the S&P 500 and the Nasdaq finished down. And on Friday, all the major indexes finished up. The new unemployment claims were 231,000 versus 230,000 expected. The core personal consumption expenditure prices rose 4.7%. The 30-year mortgage rate dipped slightly from 5.98% to 5.84%. Pending home sales increased in May, up 0.7%. Home prices increased 20.4% in April year over year. Natural gas dropped 16% for the month. And the 10-year U.S. Treasury yield dropped below 3% for the week. New unemployment claims, core personal consumption prices increasing, the 30-year mortgage rate dipping, pending home sales increasing, home prices rising, natural gas dropping, and the 10-year U.S. Treasury yield dropping below 3% for the week are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day or even every week, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the president, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is a bear market trap? A bear market trap is a false technical indication of a reversal from a down to an up market that can lure unsuspecting investors into buying stocks, because a bear market trap is also a bull trap. Investors believe the market is on its way up, but it is still in a bear market. A bear market trap can occur in all types of asset markets, including futures, bonds, currencies, precious metals, and cryptocurrencies. The S&P 500 entered a bear market on June 13th, 2022, and over the next couple of weeks it rebounded, creating the bull trap. But this past week, the market dropped again, which continues the bear market condition. The initial rebound could be considered a bear market trap, which again is a bull trap. Are your stocks in a bear market? Have your stocks rebounded only to fall again, indicating a bear market trap? Or do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. However, if you ever want to learn how to get wealth and income through the stock market, you are going to have to teach yourself. You must RSI, that is, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor. And they taught you absolutely nothing about the U.S. financial system. You can learn how to be an investor if you simply start reading books about investing, books that you can borrow from the library for free or buy cheaply online. It is not difficult to learn how to be a passive investor, which is what most people should do. Check out these books on the recommended books, on the books page on the Southside website. These books and others like them will not tell you which way the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is the Southside trading watch list for the week ending July 2nd, 2022. The strongest performer on the list this week was Enterprise Products Partners, ticker symbol EPD. In the first column, it was up 1.07% on Friday and increased 2.67% for the week. Enterprise Products Partners is a provider of midstream energy services to producers and consumers of natural gas liquids, crude oil, petrochemicals, and refined products in North America. The company's business segments includes NGL pipelines and services, crude oil pipelines and services, natural gas pipelines and services, and petrochemical and refined products services. Looking at a summary of results, you can see that Enterprise has increased 12.16% year to date. I did not trade Enterprise this week, but I may trade it in the future. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do you do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside Portfolio Cash Flow System is outperforming the S&P 500 Index ETF SPY. The Southside Portfolio is down minus 17.83% versus minus 19.73% down for SPY, a difference of 1.9%. The Southside is beating SPY by almost 2%. The cash flow generated by the Southside cash flow system for this week was 6.63% of the portfolio account value. The account value changed by minus 3.95%. Meanwhile, the S&P 500 ETF SPY changed by minus 2.27%. Bitcoin watch. Bitcoin lost more than 10% this past week and continues to be in a bear market. It has lost more than 72% of its value from its all-time high in November 2021. I sold option contracts on two positions this week, one call and one put. That ranged from $67.01 to $213.36. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. Check out past videos for other questions of the week in order to increase your financial IQ and understanding of the stock market. The videos are organized in playlists levels 1, 2, and 3. In the meanwhile, please like, share, and subscribe.